Welcome, everybody, to the Chinchilla Picking Podcast. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. It is March the 11th, 2022. My name is David Underwood, and as always, I'm here with Brandon Beaver, and we are proud to announce we are 1 year old.
1 year.
1 year. We act like we're 1 year old, but we this podcast has now been on the air, ready for everybody for 1 year. We hope we've actually been educational, entertaining, and uplifting.
Yeah.
So how do you feel, man? Go ahead.
Great. One of the things that we predicted when we first started the show, and we said it throughout last year, is that a lot of our competition, unfortunately, and this isn't me cheering or doing a victory lap on this. This is not a good thing for everybody, because the consumers and the people who listen deserve to have as many voices in this market as they possibly can. But I said that a lot of our competition would disappear, and it's starting to happen right now because we're having a long downtrend so far this year in the market, and some people are just giving up. Bloomberg says that retail traders and investors slid from 24% of the market in the first quarter of 2021 to 18.5% in the fourth quarter. So you see a lot of retail investors losing money and getting out of the market. And it's unfortunate. It's very unfortunate, because instead of learning, and hopefully a lot of these people have just taken time off, and they're taking time off to learn from their mistakes, and they'll get back in. But I have a feeling that's not the case. So I think a lot of the retail trades that happened in 2020 and 2021, a lot of those people are no longer here with us.
Yeah, I mean, and you had those retail traders that came in, and we called it. They'll be gone here shortly, and it's just because they're looking for that. How do I make $1 million bucks? And then I talked about NFTs was the next big thing, and they'll move on to the next big thing and next big thing, constantly chasing that $1 million in a month mentality. $1 to $1 million in a month, but that doesn't win out in the end, unfortunately. I wish them best luck. I hope they're all doing well. Especially, I also want to mention that a lot of podcasts, financial and investment podcasts, have come up and gone as well.
And YouTube.
And yep, YouTubers, they come and go. We've seen some of our competition guys that I would say probably haven't had a podcast release in months, and they were releasing podcasts every week. So it's been definitely a drop for everybody. Everybody shopped off. But to make it a brighter side, we have always been here, guys. We're always here for you. We're always going to continue to be here for you. This is what we do. This is what we love to do. We don't, and I think this, Brandon, I think this is what really makes it for us. We're not doing this to try to make a living off of it. No, and right. I think that's a difference. Like, we do this because we love it. We enjoy it. We would probably produce this show if only one person listened, but luckily that's not the case. But we would probably still produce the show if that's all there was.
Yeah, and we have a strong foundation of the fact that we've lived through market cycles like this, and we've invested through market cycles like this so far. I mean, this may turn out to be something like we've never seen before, but we can be prepared for it, and so we'll last. Whereas a lot of new people that are new to the market and that just got in at the tail end of the bull market will not.
Yep.
I don't want to call, I don't want to put
I wouldn't put anybody out there. I'm not going to use names, but
but then also we don't exactly know for sure if this is the end of the bull market. It just seems like it could be.
Well, we're actually going to get into that in the show, but before we get going, I want to mention this, and then we'll get started and we'll get rolling. And we'll let Brandon lead off because we have a few back and forths. But if you are listening and you are enjoying what you hear, guys, go ahead and hit that subscribe button at the bottom of your screen, or however you listen to us, whether it's Spotify, Apple Podcasts, Good Pods, Anchor FM app, whatever you're listening to us. Please go ahead and hit the subscribe, and then leave a review. I mean, that's how we organically grow. And that's how other people hear about us, because if you like us, someone else might like us as well. So that's my only ask. We don't ask for money. We don't ask for money to our Discord. We don't ask for money for you to email us. We're here for you guys. DM us, email us, reach out to us. But all we ask is, just hit subscribe and leave a review.
Yeah. So
all right, guys. Go ahead.
No, what I was going to say just on that point is that, last year I said that we were probably at the tail end of a medium term market cycle. And it really looked like, the financials were going up and they're usually the last ones to go up. And then inflation kicks in, and that usually happens at the tail end of a
I know where you're going. I want to interrupt you because you're throwing off the whole podcast here, man.
No, because I just want to say one thing.
Okay, go ahead.
That surprised me because we did predict this. We said last year that this year was going to be tough. We didn't predict a Russia-Ukraine war because nobody could predict that.
Nobody did, yeah.
But we did say, with the Fed rate hikes coming, this was going to be tough, right? But one thing that's kind of it's crazy. No, I mean, the average S&P 500 earnings have not been revised downward. What's changed is inflation and how fast inflation is eating into those earnings, which is why I think we're seeing.
We'll go into that. Okay. I got a few points I want to make on that, but I got to say the rules, man. You got to let me get the rules. Come on. Seriously, we've been doing this show for a year now. Come on, you know the rules.
No, I forgot them.
rules, guys. Everybody knows the rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. We do not discuss it. You're here to live discussion here on the show. As always, we take turns. Brandon was meant to go first, and he already started. Brandon, continue.
So just on that, what's changed is the rate of inflation, right? Inflation was high last year, but it's gotten even higher this year so far. And it's eating into those earnings. Those potential earnings that people pay for have now become less valuable. So even though these companies aren't revising downwards, and that's good news, and that could provide support to the market over the medium term, inflation, we really need to see inflation top out. That is the top. The CPI has now become the number one indicator for me. It hasn't been the 10-year in a long time because the 10-year yield has been broken. So now the question becomes, and I've heard this so many times, it irritates me every time I hear it. Now that the market's down, does the Fed really raise rates 4 to 7 times? Yes, they should. Because
they announced they're raising rates today, dude.
Yeah. So the stock, and they should continue to do it, right? They should continue. The stock market isn't the entire economy, and inflation is hurting people. The stock, who cares at this point? Really, who cares if the S&P 500 is taking a hit? Gas prices are around $4.50 a gallon or somewhere around there. And the common estimation is that they're going to go higher, and groceries have gone higher, and people on fixed incomes, the retired people, the poor people, they're really being hurt by this.
Yeah, and let me give you some numbers to back up what you're saying here, because it's how consumers feel about the economy. And there's a number that tracks that. That number was being reported as low as 60 today, which is the same number that was reported back in 2008. So people are feeling as bad about the economy right now as we did in the middle of the Great Recession. Yeah. But seeing some guys on CNBC today, and they brought up a good point. They said, when we look at credit card spending, it's staying level. But when you look at that, is that because of inflation and people are actually spending less and buying less things, but the spending looks like it's just staying level because inflation has gone up?
Well,
and is that what's happening?
Yeah, what contributes to that bad the bad feelings about the economy is the fact that the people are having to spend that money on things that they need, things that aren't fun, other than, they're not going out. They're not driving if they don't have to with these gas prices. They're not, going to amusement parks or doing things that are fun. They're having to spend this money on dull groceries instead of, things that make them happy. So.
Yeah. And that's, America is this, we have this society of commercialization and always wanting the neatest and greatest thing. And it's hard for us as a society when we go into these periods of high inflation and a slowdown in the economy, which is what we're experiencing.
Yeah. But we'll get through it.
And we always do.
I read
It's just a matter of how long is it going to last, and what are your trades and your thoughts, and how do you look to invest in this, Brandon? Because I know I invested during the 2008 and 2007, that whole change in 2 years. I was investing during that time. I know how I would invest in this. How are you going to invest? And then I'll chime in when I'll get my buzzer ready.
staying long on the long-term investments that I have talked about on the show recently. I'm cost averaging down when I feel like I have the opportunity, not on those, crazy rallies. When bear markets always have rallies if we're in a bear market. But on the dips and companies that are strong financially that can get through a medium term and even long-term recession. And then I know that we'll come out on the end of this. And I know, I don't know how long it's going to take, but I know at the end of it, my patience will be rewarded.
I got two I'm watching right now that are kind of what you're talking about, and they've been beaten up. And one of them rightfully so, right? And the other one is now being beat up, rightfully so, for its numbers and for what's going on politically in the world, geopolitically, and the mistakes they're making. And we'll talk about that one first. And that one's Meta. Meta is getting beat up right now because of things are doing wrong with this whole quote unquote wrong, according to different groups of society, with this whole Russia-Ukraine crisis, and Russia's punishing them in Russia. The West is punishing them for them not doing right, and Meta's just trying to walk this line and handle these things, and they seem to be doing a bad job on all fronts.
They need public relations. It's funny you mentioned that because I just added to my Meta position today at around 187.
I think they're going lower. Dude.
You think so?
Yeah, just the news is so negative about it. It's negative. That's all I see.
Okay, so
show me a positive news story about Meta past week.
But see, that's usually my when you have a good company that's got good earnings and stuff like that, that's usually my sign to buy. That's capitulation is what that is.
Yeah, and that's like I said, it's one. Yeah, it's one I want to buy, but I think it's going lower, so I'm not buying now.
They need
because they're investing their money into the economy and into that company for future growth. They have a long-term plan, and I like their plan, and I like how they're using the money they have. But right now, they're just not hot. They're not popular, not nothing. And I'm waiting because I think they're going lower.
So I heard a CNBC analyst today say that Meta Platforms does not know who they are anymore. And that's not true. If you've been listening to the earnings releases and the earnings calls and stuff for the past like 2 or 3 quarters, they've been telling you exactly what their plan is. The problem is that most retail investors, and really even some institutional investors, don't pay that much attention to the earnings calls and the earnings releases to be able to understand what Mark Zuckerberg has been saying for the past 2 or 3 quarters. They do not have a good investor relations department to get ahead of these things. As far as communication goes, as far as everything else goes with money and stuff, it's good. But and management's been relatively good as well. But I think one of the things for them, it's hard for people to digest in this environment that they're going to be reinvesting a great portion of their earnings into the metaverse, which has not come to fruition yet. And everybody knows that's going to put a cap on EPS, and that it's a risk, right? And risk right now is something that people are not tolerating.
They're afraid of. They're afraid of the risk. But like you said, and this is what I agree with you on, is if you listen to their earnings call, you listen to their goal, their strategy, and how they're investing in money, I like it. And I like what I see there. I honestly, I think this company's a buy, but I think they're going lower in the short term. So why should I buy now when it's going to dip down lower? I could get it cheaper at 150.
Well, my thing is that a lot of the market has been trading not on technicals, which I can,
you can understand that right now. We've seen weeks like this before.
Yeah, but it's not. It's trading on fear, and oftentimes it's hard to predict when that fear is going to reverse and that emotion comes back to the positive side. So when I'm seeing things right now that are undervalued, I'm just starting to dip into it. We're in the Russia-Ukraine war right now. It seems like it's not going to come to an end, maybe probably anytime in the short term or medium term. And even if it does, we still have Fed rate hikes after that, right? So we still have more Fed rate hikes. So this is still going to be a tough year, even if Russia and Ukraine, even if that starts to come to an end, we'll see a rally for sure if that happens. Absolutely, that'll be a crazy rally. But then after that, the Fed rate hikes will come back into focus and it'll bring things back down again. But seeing these things that are beaten down that you think you can buy in for the long term, you may have these 20% downsides. I'm on the opposite end of this right now. I'm around 20% down on Facebook/Meta, but I'm not selling it because I had an outlook where this is 5 to 10 years out. Right. So a 20% downturn, it sucks. I really didn't expect 20%. I expected a tough year, but I didn't expect this. And so what you mentioned, like them being targeted by Russia. I know they're being targeted by Russia, but they don't, a large portion of their users don't live in Russia.
Yeah, I know. I know, but my point was, with that is they're being targeted on all sides right now. Like they can't win. They can't win for losing. It's just nowhere.
And even the news that really doesn't matter for them is being made out to be like it's the end of the world.
Yeah, and I see it, and I see that they're a fundamentally sound company, and they have a future because a lot of people still. I mean, most everybody still has a Facebook. There's a few percentage of us like myself who don't and won't. But most of the world does, and they'll continue on. And they got a future there.
I will say this: if you sit and you're trying to wait for it to go lower, if it does, you're going to be rewarded for that. If it doesn't, so what? You missed an opportunity cost, and there's a million of those every year.
That's true. So if I believe it's going to go lower, I should put a third of it in now, wait for it to go lower, put another third in of what I was going to eventually put in. And then it goes lower, I put another third in, and I do it in thirds.
Yeah. But back on track here. We are.
I mean, we're talking about Meta, and that was one I brought up. And I think that's what I would do with Meta. You're still long-term on Meta, but I think this is one that, because of the geopolitical environment and the news of the day, that is having a negative effect and it causing some headwinds to the company. So, and I'm looking to profit off of that by buying it when it goes lower. But now having, just live here on the show, you guys heard Brandon convince me that I need to do it in thirds. And so this is, this is why we talk with other traders, and this is why we follow the news and why why we were doing what we're doing right now. But go ahead. That was all I wanted to make sure everybody knew clear on Meta where we stood. You're still long term, and I'm buying.
Speaking of Meta, I had put this. We're 1 year into this, like you said, and I put together a list of some winners and losers on my part here. And so far, this is a loser, but it's still to be determined.
I think long term you're going to be proven right.
Yeah, they've had these downturns before. They reverse some, they come back, right? When Facebook switched strategies from desktop computer to mobile, the initial reaction was to the downside, and it was a similar reaction to what we're having right now. I don't think it was as extreme, but it was similar, and Facebook wound up being right. And if you invested when they were switching into mobile, then you wound up being rewarded for it. But that is a loser. So let's go into some of these winners and losers here. A win: Jacobs Engineering traded up about 16% from when we said to buy it on August 9th of last year. This was
massive company, by the way.
Yeah. And it's, by the way, it's given up some of those gains, but we traded it. We told you when we bought it and when we sold it. We bought it on August 9th, and we made about 16% from this. On the same podcast, I said that IFRA, which is the iShares Infrastructure ETF, would be a safe play. This wound up being true as well, while J, the individual stock that I picked, has now given back most of those gains since we sold it. IFRA has traded up around only 6%, but it stayed flat from there. So it did wind up being one of those, muted gains, but safer gains because it hasn't given it up. Lockheed Martin, end of last year, somewhere around December, I called that a buy. This was a great hedge, which netted me over 30%. It was a no-brainer in my opinion. I didn't expect the Russia-Ukraine war to push this all forward so fast. I did expect souring relations with China and souring relations with Russia to push it forward, but I didn't expect that to happen as quick as it did. And that was, and we made the prediction last year. This was an easy one, that this year would be a tougher environment. It is very much a tougher environment so far. One of the losers so far, unfortunately, is NVIDIA. But I say so far because me and you both agree that this company will play a long-term, large role in the future of our economy. Go ahead.
Let me hit my buzzer here, buddy. So that was a winner.
For you,
I called it back in the day, and then I said I sold, and I went on here and on Instagram page, both said selling the video, getting out of my position. I'm leaving a little bit in it. And so I sold, and I told everybody else, you should probably sell if you're just trading it. So that was a winner. But then I bought back in, and now it's a hair. It's like 1% down right now, which I'm okay with.
Okay, so I stand corrected. All right,
it's a winner and a longer term hold loser right now.
If you're down 1% on anything right now, then it's not that big of a deal. I think the S&P is down like 6%. So whatever.
Right. Sorry, I hate losers, man. But we make them. We make mistakes.
Yeah. We said that SPACs would underperform vastly. Did a whole show on why SPACs are a bad deal for investors, generally speaking. And they have underperformed vastly. So that's been right. A big loser last year. And I hate this because it is not the company's fault. It is the people who lead China that have taken Alibaba down. For me, I lost. And Didi. I lost 25% on this. I got lucky and was able to be flat and break even. I think I made just a tiny bit of a percent, like maybe 0.01 or 0.02% or something crazy flat on Tencent. And I made almost all of my money back on Baidu as well, which I said Baidu would probably be the safer play here. But Alibaba, that hurt last year because I'm sitting here watching a great company get slaughtered by its country's leadership. And listen, I'm not bad mouthing China here. This is not that kind of podcast. I'm not bad mouthing them. They have their reasons for what they're doing. I'm not saying I agree or disagree with it, but Alibaba was a clear victim, and that sucked. Jeffries was a big winner that netted us over around 30%. It's recently given those gains back. We told you why we bought it, because it was one of the only still undervalued financials. It jumped around 30%. I sold it because I thought financials became overbought at that point, and it turns out that was true. A true call for us that's not good for retail investors was that Robinhood would continue to stink. The IPO access has been an abysmal failure for investors. Only 1 out of the 20 IPOs is now positive. About 2 weeks ago, they were all negative, but only 1 is positive. 18 of them are now down more than 20%. Avid Exchange has dropped 71% since its IPO, and Robinhood itself around 71% as well. I mentioned that Bloomberg traders and investors slid from 24% of the market in the first quarter to 18.5% in the fourth quarter. So there's been a decline in retail investors, which is a large portion of Robinhood, of their customers. That's continuing to slide. If they could not make a profit in 2020 with the amount of people that were trading, do you think they're going to do it in 2022 or 2023? No, it's not going to happen.
They're going to be disappearing if they don't find a way to change how they make money.
Yeah, I would not, and I've said this before, I would not put 1 penny of my money into Robinhood the stock or as an investment through their app. And it's sad to say because that app is so easy, it's so convenient. They've got a great product. This is something that's so rare to see, a great product from a bad company.
So, and another thing too. Remember when we brought up on the show how AMC was going on record publicly and saying, "Do not buy our stock.
Yeah.
It does not need to be valued this high," and it was at 50 some odd dollars a share. And now it's at 14.
Yeah. Now
I just,
yeah, it's in the meme stocks that's got to stop. I think that eventually, like those meme stocks, most of those are going to be penny stocks.
well, I mean, what happened with the meme stock? And this is what I think happened, guys. I haven't researched this or not, but people can only go in and buy these and hold for so long because a lot of these guys going in are buying it with like the $4,000 or $5,000 they took out of their 401k or something, and they don't have it to lose.
No.
And so they're putting it in there and they're hoping that it goes to the moon. And, when it comes back down to earth and it's not keep going to the moon, then they hurt and they get the loss and they say the market's rigged and they get out of the game and they say, you can't make it. No, a small man can't. And I'm like, yeah, you can, you're just trying to hit a grand slam home run and instead of base hits, guys, base hits.
Yeah. And shareholder lawsuits are piling up, as I predicted, because of the failure of the IPO program. Go to TD Ameritrade if you own it, and look at HOOD, HOOD. That's their ticker symbol, and literally all of the news, just pages and pages and pages and pages of shareholder lawsuits. IBKR just launched their global trader app with commission-free trading. So there's more competition in the space for Robinhood. 30% of the revenues come from options trading and retail options traders. If you're trading options right now in this environment, oof, that's
well, I mean, you could be doing puts right now.
But even those are high priced. Even those, when you have implied volatility, the price of options goes up. We've got a buddy named Jerry. He's from the Money Vikings. He's selling premium right now, which I still think is gutsy, but that's the best way to go in this scenario because the premium on these options go like crazy when you have implied volatility, and implied volatility right now is wacko. But the problem with that is a lot of these options traders, these retail investors are going to see their accounts go to zero and they will no longer be Robinhood customers.
Yeah, I know. I hear you. And I agree with you mostly, not always, because whenever I do an option, I have full intention of just buying and selling the premium. I never have any intention of holding it till the end date, till the strike. So I'm just trading the premiums, and it for me as a day trader, I'm used to that kind of volatility, those wild swings.
Yeah.
I love it. I look for it, but again, I stay out of options. I rarely do them anymore. And it's only when, there's no doubt in my mind that this company is going to go up or this company is going to go down.
I only traded options for about a year to try to get used to the options. And I think it took about 10 years off my life.
Right. I remember you were texting me like, I'm up 80% today. The next day, I'm down like 110. I'm back up again. And it's just wow. I was getting like roller coastered.
I wound up just edging out the S&P 500. And I was like, wait a minute. What do I do when I invest? I edge out.
You aged 20 years to do 10%.
I aged 20 years to do the same thing that I would normally do when I just get to passively invest. So,
right. Oh,
all right, moving on. We talked about Nuance. Microsoft is buying Nuance. It had a 5% premium, and that ranged from 5 to 6% on up days and down days. We said buy this by the end of the year, you make your 5%, and it was as close to guaranteed as it could possibly be. I'm calling this a small winner because inflation went up to 7.5%, but at the same time, we were able to get out of this in about 3 months with a 5% gain. So that was pretty good. A big mistake here, and this was an opportunity cost, so I didn't lose any money on this, but at the beginning of the year, I said don't buy Pepsi, and that was a mistake. I said that 41.9% of Pepsi's business is in Frito-Lay, which I thought at the time would experience a slowdown in sales as a return to going out to eat would eat into that business because people would be going to the restaurants and stuff, right? Now, I did trade around Coca-Cola on the reopening, and that was positive. And I think Coke did better from the reopening than Pepsi did. But I think Pepsi's up around 17% or something like that. I have to recheck those numbers, but I think it's about 17% for the year. So that was a mistake. I should have bought Pepsi. It was a bad idea to say not to buy it, but the reasoning was sound. So I will defend myself on that one. A winner, and you will have to pry this one from my cold dead hands. Berkshire Hathaway. I will continue to hold this even after Charlie Munger and Warren Buffett pass, most likely.
Did you see the headlines today?
What?
The shareholders, a large group of the shareholders got together and asked to remove Warren Buffett.
Why?
They just want to move on and get someone else in there. So they specifically asked for a director who does not own so much of the company.
Okay. Here's the thing about Warren Buffett. He's a value investor. And a lot of people became growth investors, and a lot of people lost patience. The patience of the average investor now is less than a week. For the
lost patience. What?
It's sad to say that, but some of these people are the same ones that criticized him for buying Kroger stock. Remember, before the pandemic, he bought Kroger.
Yep.
And everybody was like, well, why didn't you just put all of your money or all of that into Amazon? Not all of your money, but all of that into Amazon. That would have been a much better deal. Well, it turns out not, because Kroger just hit a 52-week high in 2 weeks. I think it was within the last 2 weeks, they just hit a 52-week high. What other company in the S&P 500 or the NASDAQ or the Dow can say that? Most can't. He wound up being correct about Kroger, and those people who were
ExxonMobil can.
That, but yeah, Exxon, the oil companies. But I'm just saying, most companies are not hitting their 52-week highs right now. Kroger is. He wound up being correct about that. The naysayers were wrong, and I think they'll continue to be wrong. This guy, he's in his 90s, but the fact of the matter is, he sees the forest through the trees, and he can see the future better than any of us.
I think he's actually doing a short trade with Occidental Petroleum, because here's why. Icahn sold his stake the same week that Warren Buffett bought. So Icahn's leaving saying, all right, I made a ton of money on this, I'm out. Warren Buffett's buying in when Carl Icahn is selling, and Icahn's a value investor as well.
Yeah.
So it seems like Buffett's doing a shorter play.
Look, Berkshire's up 23.55% in the past year, in the past 12 months. There's not that many companies that are doing this well. He's out.
I mean, the banks, yeah.
Well, I don't understand the
banks had a big run recently, right before the war started. When the Ukraine war hit, then the banks have had a short downturn, but now they've been moving higher the past couple of days.
And Berkshire's held up through that because they own Apple, and they own Geico, and Geico would be a part of the financials because of insurance, but they own Apple and they own Kroger and Pilot, a huge ownership of Pilot, which is benefiting greatly from the reopening of the economy the past year, and is growing nicely. The gas station, it's not publicly traded, but it's owned by Berkshire. They're increasing their ownership to 80% on that. I don't understand the criticism of Warren Buffett here. I don't get it. I don't.
Well, I'm the last one to criticize Warren Buffett. I admire the guy. I admire what he's done. I read books about him, not his books because he hasn't written one, but I read books about him. I just don't understand that when you see a gentleman as smart as Icahn selling, and you're buying, it's got to be a short-term play, but he's not a short-term guy. So I don't understand why he's buying a petroleum company right now when they're going up.
We'll see who winds up getting this right. Warren Buffett or Icahn, nobody's right 100% of the time. Icahn was wrong about Hertz. So maybe he'll be wrong. Maybe, it could just be that, maybe Warren Buffett looks at it and says that, we need a hedge here somewhere, even though he doesn't hedge much, but we need a hedge.
Icahn was right about Herbalife.
Yeah.
Bill Ackman didn't like that, but
Yeah. Yeah, well, I mean, I don't know. I don't see it. The only thing that I could see shareholders, including myself, complaining about is that we don't really have a clear transition. And Warren Buffett and Charlie Munger are both very much up there, unfortunately, in age. And I would like to know what the transition
and
process
the
when he's done.
board of directors did say that they're willing to move into a direction of a director that doesn't own so much of the company, or so involved in it in that kind of stock picking part of it, after Warren Buffett leaves.
Yeah.
But they're not going to push him out because of that.
Yeah, don't push him out, but let's just see a transition plan. That's the only thing I would say. But I'm a happy shareholder. So yeah, it's holding my portfolio very
There you go.
compared to Meta. So it will be, and when Warren Buffett steps down, I'm sure it'll take a dip, and that would be a nice buying opportunity. Most likely. Dave's cat just climbed up on his keyboard and desk here. So that's all I have as far as my subject goes. It's been a great year. We've been wrong some, we've been right, thankfully, more often than we've been wrong. The Alibaba loss was that's on me, but I will defend myself with Alibaba and say I did say what the headwinds would be. I did say that. I did warn people of the risks here. I just didn't think they'd be, as prolonged as they have been.
There you go. I just want to say, guys, how I trade. I watch the news. I take a look at the market, the emotion of the market, and I look for companies that are values and beaten up based off the news of the day. So, and that's why I'm a day trader, because, hey, this company had bad news. Well, this sector had bad news, but this company is actually really good. So I buy that company. It goes up the next few days. I sell it. I make my money in a 2 or 3 day time. And I'm very happy with the way I've been doing it because I'm very good at it. But I have to read a lot of news headlines and I have to know a lot of companies in and out. Like I have to read their financial charts when it has nothing to do with what I'm trading at the moment, just so I know what's going on with the company. So there's a lot of knowledge I have to have in my head already before I read the headlines and make decisions. And I just want to preface with that as you go forward, if you're trying to day trade, just know how much information you got to have ready and available already in your head, before you move into these positions.
And with IBKR's new global trader app, you can paper trade. And you don't have to put any money into it. All you have to do is give them an address, set up your email and your password, and that's it. If you want to paper trade, and you could just practice.
And paper trading is a great way to start if you're new and you just want to start, get out there. I will end with one last little fact of a headline that came out today. Uber will be adding a fuel surcharge to all their rides, and Uber Eats. As of right now, they say it's only going to last 2 months, but it is a surcharge, and they're stating that it will be going all to the drivers and not to Uber itself, so to help pay for the extra rise in gas. And it's going to average between 40 cents and 55 cents.
Okay.
So
that's another company that's disappointed me. When it IPO'd, I was
excited for it, right?
Excited for that IPO. And then when it dropped below the IPO price shortly after, I was even more excited about it because a lot of people use Uber and it's not really a saturated market still, even with Lyft out there sharing a lot of the market share. There's only really 2 companies that you're going to use. It's going to be Uber or Lyft, and that's a good position.
But it got too expensive for everyday use.
It did, but then
and that was the problem.
And then COVID happened, and I got that. But Uber Eats, they launched Uber Eats, and they made acquisitions during the COVID crisis that didn't make any sense to me at all because they paid way too much for them. It's
going to be the trucking section of Uber that's going to keep that company moving forward because it's profitable and it's doing well for them.
Yeah.
The trucking logistics, carrier logistics.
Yeah, if they can find a way to turn around those financials, I could be bullish again for sure. Just because it's a great product. It's another great product. It's just mismanagement of finances.
There you go. All right, guys. That's all I have. Brandon, was that your final word?
That's it.
All right, man. Well, as always, we've been entertaining, educational, and uplifting because we want everyone to make money. Brandon.
Oh, you know what? I forgot this real quick. We won our
Oh.
competition with the Money Vikings.
Oh yeah,
They gave
yeah.
up.
Yeah.
They gave up. And
There
then
you
we
go.
had Mark Stenell on the program.
Yep.
And thank you for the last year. Thank you for everybody who stepped in for us when we couldn't be here. It is much appreciated.
There you go. And we even sponsored a team for a charitable 5K run. So
Yep.
There you go, guys.
Dave got me into a marathon. Nope. Thought it would happen. You never thought it would happen. And now we may be facing the end of the world. So
Right. That's what happens.
You will.
Have a good night, guys.
Have a good night.